Morning, Carl, and happy Tuesday, everybody. We are flat, essentially, but the trend here is that big cyclical rally that we saw in the last week and a half, it's starting to look a little old and a little long in the tooth. Let's take a look at the major sectors here. So China is impacting. The weak industrial production numbers yesterday still impacting. We're down almost 2% in Shanghai. So metals and mining have been weak. China shares are weak here in the U.S. Banks are weak. Retail is a little on the weak side. Energy has been down all throughout the morning. You saw oil moving down on some of the recent headlines here. So this was that big cyclical trade that was powerful in the last week and a half. You see it slowing down a little bit. Moving markets, of course, we've got the Fed meeting today, and you've got a real dilemma here. We had great industrial production numbers in the U.S., as opposed to China, which had disappointing industrial production numbers yesterday. So the Fed's in a little bit of a conundrum about how strong they want to be on the let's keep cutting rates story. China's slowdown is still continuing. That's out there, and that's been a big issue. Their retail sales were weak as well over there. And the big problem is we're in this nothing area on earnings. Are we at a global bottom in the business cycle or not? Nobody knows. And so you're not hearing a lot about earnings right now because it's not clear what direction we're going in. That's going to be a little bit of a problem. You see this malaise in the Bank of America's monthly report, their fund survey. I love watching this because it's fairly large and it's a good contrarian indicator. So if you take a look at what the Merrill Lynch fund survey said right now, 38% expect a recession in next year. This is about 150 big global fund managers. That's really high. Only 59% say no recession. This is a good contrarian indicator. Remember, fear level is very high. Often these things don't happen. What are they most afraid of? Obviously, the trade war. That has been a big issue. 40% cited as their number one fear. This is interesting. Many feel that central banks may not be effective anymore. 13%. I haven't seen that before. Bond market bubble, China slowdown. That's been around for a while. What's the issue going on with what change things? What would be the most bullish thing that could possibly happen to make the markets go up globally? You'd think let's end the trade war? No. German fiscal stimulus would be the number one thing that would move global markets right now. That's very interesting. I bet Christine Lagarde is very involved in trying to make that happen. Fed rate cuts, infrastructure spending in China, not the U.S., and Brexit resolution are the top four issues overall here. What's going to have a big move on some of these markets? What's going to make a difference here? The biggest crowded trade is long Treasury bonds. That's been out there for 6 months now, and that's the thing that could blow up the easiest. That's the biggest thing that could turn things around. Long technology and long gold are also the two other most crowded trades out there. Finally, despite all this WeWork's disappointment, the IPO market moves on here. We've got some big software company coming. Datadog, big software analytics company. They're going to price in the next Thursday. Look at this here. They upped their shares 24 to 26. Prior talk was 19 to 22. Remember, Cloudflare did very, very well. They upped their numbers. They priced at 15. Cloudflare is still trading above that. Might be down a little bit today, but it was $18 at the close yesterday. Finally, we're going to get another big dental company, despite what was going on with Smile Direct here. Invista will be pricing tomorrow. That'll be here at the New York Stock Exchange. We'll keep an eye on that one as well.